This is Jordan. This video is being recorded on the evening of Monday, November 27th, 2023. Thank you so much for tuning in. In this video, just going to talk about inflation expectations a bit and why it appears the Fed rate hikes to this point have failed. They failed to impact inflation and inflation expectations, really the long-term outlook for inflation. That's the problem for the Fed. This is one chart here looking at in the white here. This is the 1-year inflation expectation. I believe this is the University of Michigan inflation survey, consumer expectations of inflation. And I'm going to talk more. This is, I think, the 5-year here in red. And so we can see here, I mean, in the last little while, you have this huge rebound in the 1-year expectation, down from 3.2% up to 4.5% just in the last little while. But I mostly want to talk about this. And so this is the 5 to 10 year inflation expectation in blue. So it's at 3.2%. And I think this came out today, by the way. And so this is actually the highest level. You have to go back to, this is probably the oil spike in 2008. So, I mean, what is that? 15 years, almost a 15-year high. I mean, not by that much. So it's not a huge breakout, but it is a breakout here to a 15-year high. Down here, I think this is just the change over 2 periods, over 2 months, like the rolling change. But here's the issue for the Fed, and here's what I mostly want to talk about. The main point or idea behind this video is essentially this is the second biggest, greatest hiking cycle ever for the Fed, other than the early 80s. And they've done that, and inflation expectations have not come down. These long-term inflation expectations have actually moved up, as you can see. And this is at the end of the tightening cycle. So that's a problem. And so I'm just showing here, the arrows show when the Fed stopped their last hike in these other cycles. I wish we could see this going back before 1990, but anyway, I mean, 30 years, not bad. I mean, you know me, I like to look at 50, 60, 70, 100-year charts. But anyway, so this is the end of a Fed hiking cycle here. If expectations were still coming down, this is when they stopped hiking in early 2000. This is in the mid-2000s. I think this is the beginning, I want to say like around April 2006, possibly. So you did have, inflation, long-term inflation expectations had come up a little bit. Commodity prices were running. But, I mean, the Fed saw what was, about to, or they probably knew, the risk that was coming, all the deflationary risks with, housing being a massive problem and all that. But anyway, and then so here's the end of the next cycle, which was December 2018. And I mean, are they done yet with where we are here and now? I mean, this is a major problem. Again, this is the second greatest tightening cycle ever, and it hasn't done anything to long-term inflation expectations. I mean, this is a major issue. And that's part of the reason why gold has held up so well and is, possibly could threaten to break out this week. We'll have to pay attention to the monthly close on Thursday. That'll be significant. But, this is a major issue. And if we go back here, I mean, even, short-term inflation expectations have rebounded. So I don't want to guess how this is going to play out, but the fact that long-term inflation expectations are at a 15-year high, and look at the oil price is 40% off the high. from a couple years ago or a year ago, whenever it was. 40% off the high. I mean, the chart for oil looks like shit. I mean, it doesn't mean it can't start moving up. And you look at commodity prices, if you look at an equal weighted basket or you look at the CRB, I mean, they're off like 20%, 25% of their highs. So commodity inflation is not really a problem now. But, you take that out and you still have this long-term issue here. You still have this rebound. So the issue is, what happens if these inflation expectations hold and then you start to get a rebound in commodities again, where you get oil moving up again, natural gas and copper and those types of things. They start moving up again. Then you have expectations for inflation are really going to accelerate. And then you're looking at stagflation. So this is I don't need to make this like a 10-minute video because that's the main point. Is that the rate hikes to this point have failed, and if they're done hiking and the economy doesn't roll over in the next quarter or two, I mean, you could have a burst of inflation, and then you're looking at stagflation around the middle of next year. I'm just thinking of a potential scenario, but long-term inflation expectations are still a major problem. And, the bond market's rallying now, but you put that together with, all the money that's been lost in bonds, a lot of that money, yes, some of that money's moving into stocks, but a lot of that money is moving into gold. And that's, part of why gold is near the all-time high, really close to breaking out, despite the fact that everything is not perfectly set up fundamentally, at least not yet for gold. That's all for this video. Let me know what you think. Leave a comment. Talk to you guys again in the next video.